Alright guys, welcome back. This is the video that you've all been waiting for, how to operate the money printer. So in this video, we're gonna go straight to the point. What I need you to do is to go to Navigator, make sure you have a broker connected. If you haven't done this already, go back to the previous videos where I show you how to sign up with a broker, create a demo account or live account, whatever stage you're at. You're gonna need at least $500 and you're gonna need at least 30 to 1 leverage you. The more leverage you can use, the better. The more leverage you have access to, the less money you're going to have to put into the account to execute the strategy. Even if they only allow you, 5 to 1 leverage, it just means you need to put more money into the account, but the leverage the risk that you're going to be taking will be the same. It's just regulations around how much leverage that's available to people. So as high as you can, that will be the leverage you select for your broker. But what you need to do is you need to come into Navigator and you need to go to the trend index that we have up here. You click this and you can see we have the trend index here. So it says top up trending and top down trending. And today we're just going to focus on one pair. We're just going to keep it simple, okay? But the process is the same for the rest. So in top up trending, we have Euro CHF looking very good. You can see it's green across all the fields here, so let's go have a look at it. And I do this by clicking one time on this and it will bring it up. All right, so the next thing I want to do, and this is important, is that over here on this sidebar with the price, you want to click down on it and you want to scroll like this. Okay, scroll like this until you can see even the 1 hour. There you go. So this is the complete picture, right? This is the complete picture of the market. This is what's going on right now and how our algorithms have mapped out the current active buying and selling algorithms for the specific market. The green bands are the buying algorithms for the specific time frame. So this would be 1 minute, this is 5 minute, 15 minute, and 1 hour. So these are all individual buying algorithms that activate at different frequencies in the market. So the 1 hour buying algorithm is not really active on the 1 minute, but the 1 minute algorithm will be active on the 1 hour if the price gets there. The same for the rest. Okay. So we have selected a market, and what you really want to do is just get like you just want to have a look at it, get an idea of what is this thing doing right now. And maybe it doesn't make sense to you in the beginning. Don't worry, you don't have to get it from the start. You will learn, okay? Just because you don't know how to do it right now doesn't mean you're not gonna learn, right? No one knows how to do anything until we do it, and then we know. So don't worry. And what you can see is that down here we have orange, it says stop loss, right? So this will be our effective stop loss, and this will probably change with time of where it's going to be and so on, but we'll always have a stop loss that we're working with. So this is really a key point we want to keep in mind, okay? And what you also can do is you can go to 5 minute, and then you'll be able to see even more context. Now the 1 minute band will be gone. You'll only be able to see the 5 minute, the 15 minute, the 1 hour, and the 4 hour. And if we go to the 15 minute, you'll not be able to see the 5 minute. And when you go to the 1 hour, you'll not be able to see the 15 minute. So the reason that we operate on 1 minute is because it gives us the highest resolution of what's going on in the market. But what we can use the higher time frames for is to give us context of how has this market behaved in the past, how did it perform with the algorithms, and we can see how it done. And we can see how it has, you can see with your own eyes right there how good it has been. Look at these entries right here, right? Beautiful bounces, great bounce here as well. Nice, very good. That's what we want to see. And you can always do this with the neural technology. You can always just apply it and look, well, how has this performed in the past? And you will see this alien technology just fucking works every goddamn time. And it is because this is inherently what's going on in this market is just entropy. It's just energy in a system, and we can measure it, right? It's not that complicated. Don't overcomplicate it. And all we're here to do is just to provide liquidity to these guys who are in a rush, these guys who cannot wait, those guys who are willing to buy an iPhone for $2,000 when it just launched for $1,500 because they cannot wait. They are greedy. Greed is bad. Okay, so now you understand the time frames. Let's go back to 1 minute. This is where we do all of operations. This is where we do everything. And the reason we operate here is because that it allows us to quickly get in and out of trades, because we have such a low frequency that we're looking at the market, right? So when we get a quick entry here, we can get out immediately after. But you can't see that on 15 minutes. You can't see that on 1 hour. So that's why 1 minute is really the ultimate time frame. And even better would be 1 second. And even better would be 1 tick. But right now we work with 1 minute. All right. Let's see. So the last thing we need to talk about here before we really move along with this EuroCHF market is that we have built in this session news indicator down here in the bottom, which will show you all of the upcoming news, how important they are, when something's going to happen. And what you always want to pay attention to is really just where in the cycle you are, because you can see right now we are at the end of Asia session. That's the yellow one, and you can see the price here is, it's saying 1348, and we're just about to enter this green dotted zone, which is the kill box of London. It's the initial gap between the Asian session and the London session that converges. So if there's anyone from Asia that has business with London, they are gonna open very soon and start doing their business, and that is gonna move the market. So it helps us understand why is the market not moving anyone right now. But no one is doing any business around the world in this currency right now, and that all depends. You know, the AUD New Zealand dollar, right, is of course more active in the Asian market than it is during the US session, because that's the nature, the home of the currencies, right, in Asia. And the same with Japanese, yen, and so on. But the most effective session to trade is the US session. There's just so much volatility and liquidity and transactions and business that needs to be done that it's the best time to trade. And you can see we're going into London. So the kill box we have here, it's going to be 1 hour before the London Open at 3 o'clock. And then you can probably expect some liquidity, some moves, some volatility. So now we know that. We know in about 1 hour, London actually opens, and we can do something. So we can prepare for that. We can say, okay, well, 1 hour from now, let's prepare for the London Open, because EuroCHF is looking good. On the trend index, we can see that the buying algorithms are active. It has a good long-term trend. It has a good 4-hour, 1 hour, 15-minute, 5-minute trend. All looks good here, right? And what I mean by all looks good is that the buying algorithms are active. And if the buying algorithms are active, we're just waiting for greedy sellers to come in and you know, do their business, so we can join these buying algorithms, and they will push the market back up after we buy. Straightforward, right? But I want to touch on something here, because now we understand the upcoming volatility, and you can also see the upcoming news here. For example, this is not today, this is tomorrow. There will be some consumer confidence that's going to impact this market, right? So we want to use these news events because they drive volatility. And a lot of times, I'm not going to say all the times, but a lot of times, it goes exactly how we want with these news events. Either our trade goes to the target, or we get our entries filled on a really good market with a lot of active buying algorithms or selling algorithms. Okay. So let's move along. We have done our homework. We looked at the market, looks good, has performed good. We're happy to trade this. And the process that we're now going to do, and this is very important to understand, because there is only one process, okay? Until you have made $1 million from this, stop trying to do it your own way, okay? Stop trying to come up with your own ideas and whatever. Like, just follow this. Don't try to be smart. It's not that you're not allowed to, you know, go your own way and so on, but this is designed this way very specifically, and it only works this way right now. After you made $1 million, okay, you can go do what you want. But why don't you make $1 million first using this? There's no need for you to tweak anything. There's no need for you to change anything. Of course, there is some variables that you can touch on and can change, but in general, the whole strategy and so on, there's nothing for you to change right now. That comes later. All right. So we want to set up EuroCHF. And it's pretty straightforward. I've already done 2 videos on this prior, but I'll show you again. We know we have our stop loss down here, okay? We have a stop loss down here. And what we can do is we can just put this here just so we can read it. This line here, or you can just hover over and you can see what is the price, you don't necessarily need a line. So we can see it's 0.97373, right? So what I'm gonna do is I'm gonna put up a position up here now on the 1 minute here. And what I have to do is I have to put in my stop loss first. So this was 0.97373, I believe. And what we're looking for is to put 1% risk on this 1 minute band, and 2% risk here, 4% on the 50-minute band, and 8% down here at the 1 hour band. Okay, so just 1, 2, 3, 4, sorry, 1, 2, 4, 8. That's it. Right, so it says one lot is 0.5. So what I'm going to do is I'm going to place 2 of these, and don't worry about what the price is doing right now. And what I can do now is I can immediately add another repeat order here. I can click repeat. It's going to keep the same stop loss and give me another 0.5%. And then I'm going to add as well 2% risk here. And it doesn't really matter how many orders you use, whether you use the same or you split it up. What matters is that you keep the risk ratio correctly, right? So 1% risk in the 1 minute band, 2% risk here, and then we also want to have 4% risk here. And you're just going to put these, okay? It's not that difficult. So we put in the stop loss again, 0.97373. This will be automated in the future, don't worry. And here, we need 4% risk. So let's see if we can put up this risk to let's see, 5. That's 2% risk, very well. So I'm just going to go ahead and put 2 here. And the reason that we're doing it like this, layering them down, is because we never really know when the price comes to us how deep it's going to go. What we know is that there is a current deviation, there's a current selling algorithm that is overflowing the active buying algorithms, and that is always what's going to happen. And it will always look scary when the market is coming down against you. It will always look scary. That's the whole point. Because if it doesn't look scary, it wouldn't trigger all these greedy fucks into doing all kind of stupid shit in the market. And it's your job to just remain calm and have faith and trust the strategy, because it works. It's entropy. Okay, it's math. It's waves. And we can measure it. That's all there is to it. So we have 4% risk here, we have 2% risk here, we have 1% risk on the 1 minute band, and now we just need another 8% risk down here. And if you want to track the risk, you can see it down here. You can see right now it says I have opened 0.5% risk. That's because only one of my 1 minute bands got in. So you can see it's even in profit right now, $13, very nice. So I'm just going to put it here, the TP here, because the goal is just to take profit. The goal is just to take profit from these short-term deviations. And we're going to talk more about your TP following this, okay? But in general, this is all we do. Look at that, that's beautiful. So that's close enough for me. I'm going to close that trade. And it looks like it's going to remove all the rest of my trades. That's fine. Anyway, we just made a little bit of money. I think it was like $25. That's the whole point. Now we do it again. Right? 0.97373. Risk says 0.01%. We need to bump that up to 0.5. There we go. So now it says 0.5. I need 2 of these on the 1 minute band. Here we go. And then down here on the 5 minute band, I'm gonna need 4 of these. I could also just use 2. Instead of using, 1 lot, I could use 2 lots instead. And then down here, I'm gonna need the 4%, right? So again, 0.97373, and then you have the risk and you have the correlated risk. So right now it says correlated risk is we have a total of 3% risk in this market right now, just like we're supposed to do. We have 1 minute risk. We have 1% risk on the 1 minute bands, and we have another 2% risk on the 5 minute band. Okay, and now we need 4% risk down here. So let's put this at 5, right? And that will give me 2% risk. How about we do 3 instead? Yeah, so let's do 2.5. That's good. So that's 1% risk. That will allow me to put 4 orders in between here. And I know you're wondering, like, why are we doing it this way? Why don't we just make a single one? Well, we never know how deep it's gonna go. We never know how deep it's gonna go. So we always have to assume that it's just gonna go all the way. And if it goes all the way, we're gonna be standing and cheering and extracting money from it, okay? So we're always praying that this price is gonna come deeper. We're always hoping some lunatic is gonna sell more on these market with the active buying up. We're always hoping that, because that means we're gonna make more money. It's gonna look terrible. You'll feel terrified. You'll see your account in red and be like, oh, what is happening? It's all part of it. Okay, so now you can see if we go to my risk tab down here, it's a 7% risk. Very well, that's what we want. 7%, 8%, 6%, whatever, something like this. And now we just need to add the 1 hour trades, okay? So we can do the same. And down here, we're gonna need, we're gonna need 8% risk. So that's quite a bit. Looked like I got the stop loss wrong. There we go. 25. Okay, so 25 is 4.7. Okay, so we'll do 10. 10 will be 2% risk. That's very well. So we're gonna need 4 of these. So I'm gonna do it like this. So that's 1. I'm gonna put one at the bottom here. Gonna put another here. Another one here. So that's 4. I could do 8 as well. I could do more, right? But this is the basic setup. And you have to understand the overall goal of this now is just to wait for the price to come back down into our entry zone and take profit as soon as we can. The target is not up here, okay? The target is not like a big move. You will get lucky and get these big moves from time to time, but don't try to force it. You're not trying to force like a big move, right? You're just trying to get in and get out. We're just trying to buy it and sell it really quickly so we don't have to sleep overnight thinking about how we're gonna sell this tomorrow. We just wanna buy it and get out of it and take our profits and go home. And if you do this effectively, see, you know, we could have been holding it on and selling it here now, so that's not the point. And this is something you need to learn and experiment with yourself, is that this is not the point. As soon as you try to do this kind of directional trading with these entries you get, you will experience the problem of day trading, which is literally what we're trying to fix here. We're trying to stop people from it. So don't do it, because you will fall victim to it. It's like the dark forces. Do you understand? It's like the dark side of the world. It's not the job. Be a businessman. Be a middleman, okay? And just do this, and you can do this the rest of your life. You'll become rich. You'll do well. You can have a great life and a great family and live a beautiful experience, okay? You'll have more money than you need. You can spread this however you want, but don't be greedy. Follow the strategy, but get into trades. Get out the trades. Don't hold them for directional trades, directional gambling and so on. Don't do that. All right. Stop loss position. Now we got the trades. Let's talk about the TPs, right? So you saw before that we got a quick entry. We got a quick entry here, and I got out of it pretty quick. And that is the overall goal. What I want you to know is that when you have placed these orders, what you can do is that you can already preset the TP. So what you can do here is that you can click this arrow here, and if it's a long trade, you can pull it up like this. And after you pull up like that, it will automatically set a TP for you here. So if the market goes down into your entry here and immediately goes up here, you'll make money in an instant, okay? And you can do this for all the trades. You can also do it for the 5 minute. But that's really what there is to the TP, okay? Like, it's not that complicated. As soon as you get filled, you're just looking to get out of the trade and make money. Because most of the time, the reason we're so quick to do this is because most of the time when we get an entry and we can get out is that the market will come back down again and touch the same band, and it will do this repeatedly. And it's not only on 1 minute, this happens on 5 minute, 15 minute, and 1 hour. So imagine that the price is coming down here. This is a 4% trade you have set up here. It fills all of this, and then it starts to go up. And while it's doing this, it means that these positions are already filled and they're underwater. Let's just assume that, okay? The market went straight through this. It's now down here. These positions are in drawdown. They are red. It's looking bad, okay? And the market keeps going down. So it's coming down here. And it has filled all of these entries, and then it starts to do this. And already here, you will see really good profits from these trades. And what I want you to do is I want you to close that, and I want you to take that profit, because a lot of times the market will do this, and then you can open it again, and then it will do this, and you can take the trade. And then we have the classic inverse head and shoulder, whatever. People will make these patterns, and then a lot of times the market will do something like this and then up like that, as long as you have selected a strong trending market. And it's the same if it's short and the market is going down. It's the same, it's just opposite, right? So the point is that don't sit on these positions. Take profit, get in and out fast. The point of the 1 minute and the 5 minute bands, you know, even if they go underwater sometimes, because they do, the point of this is that a lot of time you can have these positions and you can trade them all day, and they will generate a really nice return for you, just trading these 1 minute bands. Because a lot of times these strong trending markets with the buying outcomes, they don't go to 15 minute or 1 hour. That's very rare. That's very rare, but they do make these small deviations on all the small time frames, and you can sit there all day and just print money from doing this. What you need to be aware of is that you need to keep updating your positions. You have to understand the bands on the 1 hour and the 15 minute updates less frequently, like they change direction or size or whatever less frequently than 1 minute. You can see the 1 minute changes all the time, right? And the 5 minute also changes pretty often. So what you need to do is you need to consistently update these entries, these positions that you have on the lower time frames. You don't have to update 15 minutes and 1 hour so often, but you do have to do it. But the 1 minute and 5 minute requires a lot more attention. And people ask me all the time, well, why don't I just skip the 1 minute and the 5 minute and just trade 15 minute 1 hour? You can, but you're just not going to get that many trades. The money is made on 1 minute and 5 minute, the majority of the money. What the 15 minute and the 1 hour is a safety net to make sure that when these trades get filled and it keeps going down, we know exactly how to proceed and how to trade. But most of the time, they're not going to engage with this. The stop loss position down here will also change depending on how the market is evolving. What I want you to do is I want you to keep the stop loss for these entries as they get filled. So if a 15 minute gets filled here, you keep the stop loss where it is. But if it keeps diving down and this stop loss starts to move before these 1 hour positions have been filled, okay, before they've been filled, you can keep updating the stop loss until these are filled. In the future, this will be completely automated and we'll have a dynamic stop loss. But for now, this is good enough. And if you want, you're perfectly welcome to extend the stop loss further down and reduce your risk. It just means that your position sizes up here is going to be smaller. But you can definitely move the stop loss further down, not further up. You cannot put it tighter, but you can put it further away. And I think in the future, we'll see that the stop loss will be further away. We will have a model for how the stop loss should be placed according to what that specific market is doing right now. Okay, so that is placing the trades, calculating the risk, layering the orders, updating the orders with time. You can see now time has passed. You know, so I'll put one here, and I'll put one here, right? And this is my job. This is what I do. This is where I go to work, is doing this and making sure that this works. Okay? This is the strat. And I will show you how to do it on another pair, just as to give you another example, right? So we have Euro GBP. That's probably a good example because I can see this is an uptrend right now. All right? So you can see when we look here, right? The first thing I do is I zoom out and see what's going on. There hasn't really been a strong trend, right? Like we haven't really had much strength. You can see both sides are kind of weak. There is 1 hour says 16%, 15 minutes says 10%, but there's not really much here. So honestly, this is not that interesting, right? Let's see if we can find something better. USD CAD. Again, the one day here is not that good. It's not, and you know, if there's nothing too interesting to trade, don't force it. Just take good opportunities, and that can be hard to define. But in general, they should look crystal clear, right? It should be like GBP, Euro CHF right here, all green. We're confident we can trade this, but we don't really want this mixed stuff where we have a low percentage on the trend and there's not really like any long-term trend. That's not really interesting to us. Okay, we want the strong trends, especially we care about the strong trends from the daily, the 4 hour, the 1 hour, the 15 minute, and so on. Those are really what we care about, because the 1 minute and the 5 minute and the driver will fluctuate. You know, it will flux all day. It will just go up and down a lot, right? And that's what it's meant to do. It's supposed to do this. It's part of the strategy. But if we were to set up a short setup here, right? So you can see, again, not great. 15 minutes is 11%. 1 hour says 19%. And what I think we're going to do in the future is that a lot of these markets, when they're not attractive, we're just not going to really be trading them. We'll just filter them out. But right now, what we're doing in the trend index is just showing the strongest markets relative to the entire market that's going on. So just keep that in mind and see if you can find the good, strong trends like Euro CHF. Euro CHF look really good. Let's see what else we got. All right, so this looks better. This is New Zealand dollar CAD. This looks much better. You can already see that the color here is better. You can see we had a recent rejection here from the 1 minute. Very nice. This is what we want to see, right? And the 1 hour. So the long-term trend is not great. And the long-term trend is very important. The reason the long-term trend is very important is because that if everything fails and let's say some news about New Zealand dollar comes out and this thing just starts to rocket up, you don't have the long-term selling algorithms active on this market to push it down from there. You only have this 15 minute, 5 minute and 1 minute, and that will inherently give you, you know, higher chance of losing. So this is you know, something you really want to keep in mind. The 1 hour is very important for this. But let's just say that this was over 15%, or let's say it was over 25%. If this was 25% and it looked like this, be great. That's great. And it can transform into 25%. But it's not your job to make it transform there. That's not what you do. You just extract the information from these markets and use it to your own gain. And if the trend is not there, if the data is not there, this one is just not for you, right? In the trend index, when we're looking at these trends, we want strong trends across all the time frames. So 1 day, 4 hour, 1 hour, 15 minute, 5 minute, 1 minute, and even 1 second, right? The stronger trend we can get across these time frames, the more buying activity or selling activity we'll have to drive the price towards our goals. Okay, but from time to time you'll have something mixed like Euro USD here. Well, it will still be high on the list and you're kind of wondering, can I trade it? Well, what you need to think about is that it's always about the specific band, right? So this is the driver, and then on 1 minute it's at 62%. So that means you can buy this band, but the 5 minute is very weak, so that means you don't necessarily buy that band. And if it's 9%, you probably don't want to buy it yet. That doesn't mean you can't operate on the 1 minute. You can see you can buy here, would have been a nice bounce, bought here, nice bounce, again here, a bounce. But it's not going to keep doing that. Eventually it's going to come through. And then if you're buying this 5 minute, even though it's 9% strength, it's a little bit too early. So you don't want to do that. You only want to be buying the specific bands that already have a strength. So if we take GBP CHF here, then the 1 minute band, which is not, I'll show you. Then the 1 minute band is, you know, only 6% strength here. You're not buying that. You're not even really buying the 5 minute here. You could buy the 15 minute. It's down here, but you should wait for the rest. There's not enough buying activity here yet. If you start buying these when it's too early, before it has proven itself, that's when you're making the mistakes. All right. So find the strongest trading markets. Only buy the specific bands when they have a strength above 15. Okay. But let's say that this is indeed a good setup that we want to trade, and it has, you know, strong trends across the entire market, across the entire index. So what we're gonna do is the same as before. This is our stop loss up here, and it says 0.82748. So what we're gonna do is we're gonna place sell 0.82748 or something. I think it was 748, yeah. And then we're gonna just put 1, and you can see it says 3% risk. That's too much, right? I'm only looking for, I'm looking for 0.5, so I can do 2 entries, right? So I'll do 1 here, Oh wait, it looks like I made a mistake here. You can see the stop loss is all the way up here. That's okay. So let's try again. Highlighting this with a line. Place order. And this was 0.82757. Okay, very well. Okay, so one lot is now about 0.6%. That's fine. So I'll put that in. And then on the top band after 1 minute, I'll repeat. And then here I will put either 4 or 2 with double the amount, up to you, right? And then here, so 2, we put the stop loss 0.82757. That'll give us 1% risk. And then we just do repeat order. One here. You can see our orders on Euro CHF is giving us 12% risk that we set up before. Then we have New Zealand dollar CAD, it's giving us 7.5% risk for the entire thing. We want to add the last orders. Here we go. 0.82757. So that's 4% risk. So we're going to do 10. It's 2% risk. Very well. 2, 3, 4. That's it. That's fine. So that's the setup, right? And you know us before. Your job now is to keep updating these lines. You can even set the take profits, like I showed you before. And where you should take your profits, it's really like a feeling you get. But let me explain you the theory. Overall, what is happening here is that we're trading mean reversion. It means that we're expecting the price to go back to the average of the price. Okay, so when there's a deviation in the market and it goes up into these bands, that's a deviation. And what will happen is the mean reversion will come active when that buyer is done, and it's going to return to where it came from. And once you start to get a good feeling of this, you will have a much better idea of if you should be getting in and out of your trades fast, or this is, or you can maybe drag it to like the neutral level, but no further than that. A lot of times you'll not always be able to get it to the neutral level, especially on 1 minute band. Sometimes you will. It really depends on what the market is doing. And you will find this, but my overall advice is just take profit as soon as you can. As soon as you have green on any kind of position, take the profit, put the trade back, do it again, do it again, do it again, do it again, do it again. And you will just make so much money, you won't believe it. But you gotta make sure that you trade these strong trending markets and you don't fuck around with something that doesn't have a trend. So this is the setup, right? And there's not really so much more to this. What you need to think about is that there's some situations that can happen from here. I'm gonna cover them. So I just mentioned for you these deviations, right? And these deviations is really where we have a trend. There's a long-term trend that's going one direction, up or down or sideways. And then we have a temporary deviation where it goes against the stream. It goes somewhere else, right? It goes. This is a job, guys, to rid the world of the evil. Oh, we just got an entry on New Zealand dollar CAD. This is a job, guys, to rid the evil of this world. And it's not. And you can see what happens if you're not following. Of course I'm talking, but it's supposed to be up here. My entry is supposed to be up here, right? But because it's been a few minutes, then it's too low. So you got to keep updating it, otherwise it's going to get left behind. But 1 minute, 5 minute, you can be a little bit flexible with these. You get multiple opportunities on these all the time. So don't worry too much. But make sure when you get to the 15-minute and the 1 hour trades that you actually get it right. So if the market starts to come into 15-minute here now, and you're not actually getting the entry, but it's just on the border, you can be a little bit aggressive and make sure you get the entry. You don't have to buy everything, here, but you can move one to like here and make sure that you get some kind of entry, but don't move all of them. Just make sure that you get something, right? Because it's not always that you're going to be able to actually get a full entry across the whole band. Your job is just to capture the volatility and make money from it. And that's also why you need to be in front of the PC, right? See, we're getting fills here on the $7 cat, and it's really just our job to make sure that we get these entries, right? Now, I will say, $7 cat, like I told you, the 1 hour band is not really there. Like, there's not really enough strength here that it's really that interesting. I would have avoided this trade if it wasn't just like an example for you to see how to set up a short trade. But I really want more strength in the 1 hour to be confident to stay in this trade. That doesn't mean this can't work. It'll probably work. It probably will work. And I'm just gonna adjust my TPs here, to make sure that if it does get a quick spike down, I'm ready to take profit and do it again. I've shown you how to place the orders. I've shown you how to layer the orders. I've shown you how to update these orders. And just remember, this is all going to be automated for you very soon. But right now, you can sit down and apply this and make 1% P&L an hour using it. So there's no reason to not just do it. There's so much money in this ocean for you to just take a bucket and just start picking it up, okay? We talked about trend deviations. What is a trend deviations and what is a trend transition? A deviation is a temporary fish going against the stream, and a trend transition is when all the fish is going against the stream and inherently changing the direction of the stream, right? And we're also showing you how our algorithms detect this and update this, right? We talked about when you get these trades and where you should take profit is just to take profit as soon as possible. Really, just as soon as possible, you can take any profit, you take it. If you can get multiple entries on 5 minutes, 15 minutes, or 1 hour, do it, because this is where you can make a lot of money. Take the profit from the short-term trade and see if you can get the entry again. As long as it's a strong market, then you should really just be hoping that it comes down and you get another entry. And a lot of times you do. Sometimes you don't. But just make sure that you protect these profits. So I want to talk about some rules. First of all, you need to close all your pending trade going into the weekend, and try to close open trades as well. Okay, this is really important, and the reason for that is because one of the things that can fuck us is that over the weekend we can have a black swan event, and you will basically you will wake up on Monday and your account will just be gone because something was announced over the weekend. You couldn't do anything. By the time the market comes online, it's already way below your stop loss, and your account can get wiped. So if you can, try to close all your position going into the weekend. And remove your pending trades as well, okay? The second rule is don't be greedy ever, okay? The second that you start to buy more than 1% risk on the 1 minute band and you start to size up risk on these, that moment is the time where you have lost to the evil, okay? If it happens, you need to recognize your mistake and you need to fix it immediately. Just close the trade, even if it's in loss. It doesn't matter. If you realize that you open a trade and there's too much risk on it, something, just close it straight away, immediately. Just be done with it, okay? It's okay to make mistakes, but it's not okay to realize you made a mistake and then just leave it be. You need to fix this shit, okay? Don't allow these mistakes to happen because you will lose. It's guaranteed, okay? So try to fix it when you realize you made a mistake immediately. Third rule is that you gotta pay your 10% share. Your 10% share is to access this technology, to build the tribe of Asher, and to make sure that we can bring this technology to the people around the world so everyone can run this tech on the financial markets and generate wealth for themselves so they can fulfill their purpose in life and what they're really meant to do. Because I guarantee you, people who are not meant to sit in front of the computer all day and just live miserable lives doing 100x leverage gambling on directional betting and shit like this. No, you're supposed to be out there enjoying life, doing what you're meant to do. So your 10%, when it's due, which is after you have earned back the money that Neural cost, after you earn that back, 10% of your profits, you need to pay it. And if you don't, it's a very bad idea, and you will see it's not a good idea. The fourth rule is that I don't want you to do cross exposure. If you're running, if you are trading with a small account, don't start to take trades across multiple markets. Take one trade, take one market and trade that market. That's all you gotta do, okay? One single market you can trade, and you need a minimum of $500 to do it. Because if you cannot survive the drawdown to 1 hour and get the trades here, the whole strategy falls apart. It doesn't work. You have to be able to open the trades across 1 minute, 5 minute, 15 minute, 1 hour. Otherwise, it's not gonna work. And don't try to twist this on. That's just how it is. It's a very good idea to run this in demo first and just get confidence in it's working. I don't want you to be trading this and be in the middle of a trade where the market is all the way down here and it's looking terrible, and you're like, does this even work? What is going on here? This looks terrible. I'm never going to survive this. This trade is, it's so stupid or whatever. If you haven't had the confidence in your build yet around Neural and all the people getting great results and the backtest that we've shown that it works, so then it's not going to work, because you're going to freak out during your drawdown and do stupid shit. And I don't want you to do that. I want you to have confidence in this, so when the time comes and it's going to test you, that you can have complete confidence in this strategy and this way to generate money. Okay? So make sure you run it on demo first, and when you feel comfortable, jump into live. So again, let me just summarize. You need an account with at least 30-to-1 leverage. And if it's 30-to-1 leverage, you probably need more than $500. You're probably going to need something around $5,000. But if you can get like 200-to-1 leverage or 500-to-1 leverage, you can use like $500 on your account, right? You can use a $500 deposit to do this on a single market. You use the trend index to find the strong trending markets, and the strongest ones are those that you work with. Those are the ones you choose, right? So look for the top of these lists, and these will be the strongest markets that you can really pick a trader market from, right? But do make sure that if nothing is strong and it's all looking weak or it's weird, then don't deal with it, because it's not always going to be strong trending markets across everywhere. So if it looks like this, right? This boring stuff where there's just like almost no green and just a little bit of neutral, we're not interested. It's not our game, right? And it's going to look like that sometimes. After you found your market, you have to make sure that you scroll the right way, right? So you drag here, so you get all the way and you can see the stop loss, the 1 hour. Make sure you're on 1 minute. Make sure you check the upcoming news. Make sure you're the upcoming sessions, so you know what's going to happen, when the volatility is going to unfold, when liquidity is going to be there. What I've shown you here is all you have to do. So let's just get to work. Let's get to work. Let's make you rich. Let's help you. Let's help the world. Let's help stop all this gambling in the world. All this evil gambling in the world, this short-term success that people are seeking in financial markets, and they just end up getting robbed because of their greed. Let's fix that, and let's give people a real tool to generate wealth from the financial markets. That's what we're here to do. That's what I need in my army. People who can use these tools to go out and do good. And it starts with you. So help me spread the word. And don't forget, we have an inner circle on Telegram. We have our Facebook community. We have our Kajabi community. We have live stream every Wednesday. And soon we're going to have some live classes as well. And I'm super excited that you're going to be part of this. There's below this video, there's a link to a 7-day trial. It's $49 for 7 days. And the reason for that is because in the past, people have just been abusing it. They just take a free trial, and then they take another trial, another trial. So there's a trial for you to take. You can qualify and see if this is meant for you. And I'm looking forward to save the world with you. See you around.